Hi there and welcome to yet another edition of Who Moved the Market. First of all, it's Friday, so we are in extremely good, cheerful spirits. And today, this is a bit like Surabhi calling Surabhi because joining me on the show is Surabhi Sutaria. Welcome to Who Moved the Market. It's your debut show,
yes,
and it's good to have you on, Surabhi.
Glad to be here.
Speaking of debuts, it's not just Surabhi's debut. The stock that we're going to talk about today has had a fantastic debut on Dalal Street. It is a listing that's been sizzling hot. We are talking about gains of 44-45% on day one itself. The name is IKIO Lighting. IKIO?
IKIO. I guess we'll go with IKIO.
IKIO is the one?
Yeah.
Okay, Surabhi says IKIO, so IKIO it is. So, we want to just set the context. The idea is of the next 10 odd minutes to tell you as much as we can about this company and the possible reasons why the market is so bullish about this stock and this company. Surabhi, let's start from the top. I mean, a 45% listing gain. But I guess it was probably coming, right, considering the bullish views around it.
That's true. So it was the highest subscribed IPO after DCX Systems, which was listed in November of 2022.
Okay.
So post that is the highest subscribed IPO. I think it was subscribed 66 times and close to like 150 times by non-institutional investors. So that was great. So we did see that coming, and also EMS space has been buzzing, and that is exactly where IKIO is. And it's an electronic manufacturing services company. So yeah, we saw that coming.
So remember that because you'll hear this term again and again. EMS, electronic manufacturing services. Let's go into some more details. I think these guys ended up raising about 600 crores from the market, right?
That's correct. So they raised about 600 crores, out of which close to 50% was the fresh issue, and the remaining was offer for sale. So around 257 crores was offer for sale, which was basically promoters paring down the stake from 100 to 72%. I think that's for the regulatory norm that it is. And yeah, they raised 350 crores, and of which 200 crores is for setting up a new manufacturing facility. So that's a positive as well. So very less money goes towards repayment of debt, only like 50 odd crores, and the rest is for just the general business purposes.
Okay, so they're putting some fresh money to work and they're looking to expand capacity. That probably was taken very well by the market as well. Let's now study the financials. What is this company's track record like when you're looking at basics like revenue, margins, profits?
So they've been doing around 15%. They did a 15% revenue growth in FY21. That moved to 30%, and that seems like they're going to maintain that 25-30% because even in the 9-month FY23 period, they did 241 crores versus 220 crores in the whole of FY22.
Okay.
So
we don't have their full
we don't
FY23
have their
numbers.
full year numbers yet. They are going to be out in a couple of weeks. That's what the management alluded to us earlier. But even if you annualize them, the 9-month numbers, it seems like it's going to be a 30% growth over FY22. So it seems like they're going to maintain that. Their EBITDA margins is also pretty strong. They are at the 20 to 22% margin band. And they have been maintaining that for the past 4 years at least. So that's pretty strong. And then they have net profitability of around 35 crores for 9 months period, which is at 15% margins, and that's what their net profit margins have been. So stable margins, good revenue growth, the financials look pretty strong.
Okay, so we've got the financials out of the way, but let's take a step back. I mean, what exactly does the company do? I know they're into LED lighting, but what's this business profile all like? I think they have Philips as a customer.
That's correct. Philips is in fact one of their largest customers. So let's start with what they actually do. So they are an ODM player, which is origin design manufacturer of LED lighting solutions. That's when the person who's buying from them, their supplier, they give them IKIO Lighting with full rights to design and manufacture lighting solutions for the customer.
So they're not just a contract manufacturer, which is simply just going ahead and creating as per someone else's design. They're actually providing design solutions.
They're providing designs, they are doing their R&D, and they have their own manufacturing plants. So that is a bit different from the other players. So they are an ODM player, LED lighting solutions, which is close to 90% of their revenues. They're also looking to get into refrigeration lights. So all those little tiny bulbs that lit up when you open the fridge.
I was wondering when I read about this company, refrigeration light, where is their I didn't think of it. Okay, the basic lighting in a refrigerator.
When you open the fridge and...
I was thinking about some great refrigeration, some cold storage facilities where there's some fancy lights that need to be installed maybe. But okay, thank you for clarifying that. So LED lighting is their mainstay. They are working at a pretty reasonable top line growth rate, like you mentioned, 25-30%. Margins around 20% margins. Okay, so that seems pretty straight ship. Okay. What more do we have to cover? We also want to focus a little bit on, you said ODM, right?
Right.
So this space, when you talk about EMS, so some acronyms that we are using here, so bear with us. EMS, Electronics Manufacturing Services. Yeah. This space, Surabhi, has been so hot, right? We've seen a couple of listings, small stocks like, Sirma and Avalon Tech, and these stocks, every time they list, they just go through the roof. So what is happening with this, EMS, which is what, this company is also part of?
I think the manufacturing space as a whole is just buzzing in India. The whole idea of India being the manufacturer and supplying internationally, I think that's a big positive, and that's what the recently listed companies are doing as well. So Keynes, Avalon, as you mentioned, so they are also supplying these ancillary parts or printed circuit boards. That is what Keynes and Avalon are into, the little green frames with wires in for auto companies and for aerospace companies. So I think the whole manufacturing buzz is what is helping them get the listing gains that they are getting. Keynes also listed at close to 40% premium when they listed back in November. So similar listing gains that we're seeing for IKIO as well.
Absolutely. And I mean, Keynes hasn't stopped ever since, right?
No.
Some of these smaller stocks, they're being just lapped up left, right and center by the market. Perhaps the market looking for niche players, very specific ideas, as Surabhi mentioned, in the manufacturing design space. Speaking of comparatives, now let's start talking about life beyond day one, right? Now, this is a company that's already done 40-45% listing gain. Where does it take the valuations to, and how do the valuations compare? Can we compare it with some of the companies that you mentioned actually?
So we can compare it a little bit. We can compare it with the other, the ODM players like Keynes and Avalon. So Keynes is currently at 85 times FY23 PE, which is again very high. Dixon is another comparison, 92. Dixon is a little different, which is OEM player, so we'll get back to it also. But yeah, IKIO was supposed to list at 50 times FY23 PE, but with 40% premium, and now it's 70 times FY23 PE. So a lot of their list, the gains are already in the first day, but I think there is some more room to grow because the management commentary is also pretty strong.
Yeah. I mean, when I hear these valuation multiples, 60 times, 70 times, just so hard to take in. But please bear in mind the caveats that, number one, these are trailing earnings that we're talking about, in the last 12 months. Forward earnings, these multiples obviously will go down. And secondly, we also have to bear in mind that once the market likes a theme, and it finds the company's fundamentals sound, many a times valuation multiples can completely go out of the window. And we're not saying whether it's right or wrong, but typically I'm just describing what happens in bullish market cycles, that if the market is convinced about an idea, convinced about the execution capability of a management, the track record, then you just have a huge amount of money chasing a very few niche set of stocks, and then valuation multiples can go absolutely haywire. But now coming back to the comparison between, let's say, a Dixon and IKIO, like you mentioned, Dixon is original equipment manufacturer, whereas this one is a original design
manufacturer.
So the difference?
So okay, let's start with OEM first. So OEM are basically just sold by companies like Dixon on the design that is given to them by their customers. So it's like contract manufacturing. They will give them the design, they will give them the specifications, they will give them the model types, and they have no IP rights. That is very important.
Right.
So Dixon has no IP rights. They will just take the design as is, manufacture and sell it.
Execute the order and
then
get the revenue. Yeah.
Whereas IKIO is a design manufacturer, so they have the IP rights. So if at all in future they want to start their own private label, say, they have the option to do it because they own the IP rights. They do the R&D and they give suggestions on the design to the customer. So that has a higher margin scope, and which is why Dixon and IKIO may not be exactly like to like comparable because the Dixon margins are much lower on this particular reason.
Got that. And it's really really important to keep in mind, because it's very clear that now that you described it, that IKIO is a company that's higher in the value chain, pretty much, when you're talking about contract design solutions, because it's also designing these solutions with IP rights, unlike some of the others. So on the original design manufacturing side, or the ODM side, which are the other companies?
Keynes is one of them.
Keynes would be one of them.
Syrma is one of them. So Syrma is a little bit of ODM plus a little bit. So they have a mixed profile, but the newer ones are leaning towards the
I know you were hearing the interview. What was your takeaway from the company's management?
They sounded quite positive. They sounded quite positive on their revenue growth, on their asset turn. So they gave us a few numbers, not many guidance numbers, because the results will be coming out soon. But they said that they have an asset turn of 5 to 6 times. So if they are putting the 200 crores of the fresh money that they're receiving, they can do a revenue potential of 1,000 to 1,200 crores once it reaches peak utilization levels, which they indicated could be the next 1 or 2 years. So 1,200 crores alone from the 200 crore capex. Along with that, they were very confident on the EBITDA margins as well, 22% margin band. Another interesting fact that they said was they will get their export revenues higher. So they do around 15% export currently from their overall revenue pie, which was just around 5% 3 years back. So 5 to 15 already, and they aim to do it 30% in the next 3 years. So they're going to double their export revenues, which is great, because then they are moving away from their largest customer, which is Philips, which is one of the many concerns that people have on IKIO. That Philips
client concentration.
Client concentration. So they have their client concentration coming down. It's already down from say 60 to 52%. So I think with moving to exports, they can get it down even further, because then they will be addressing the larger client base.
Got it. All right, Surabhi, thank you very much. I think this was very, very interesting, and we're also in an exciting kind of a market where mid-caps are anyway the flavor of the season. That's what everybody in town wants to really latch on to. And we've got 2 fantastic listings on back-to-back. There was Mankind Pharma, I remember, just a couple of weeks ago, maybe a few months ago. And now we have IKIO.
IKIO.
I'll get the pronunciation right. By the end of it, I will, but very interesting story, and thank you for explaining it to us as well. All right, folks, so there you go. You have more food for thought as you're considering the new kid on the block, IKIO Lighting. Thanks for joining in. Keep sending us your feedback, your comments and queries. Have a fantastic weekend. We're going to see you again with all the market action next week on Monday.